Hello and welcome to the Business and Banking Dialogue Show. We bring to you bi-weekly, as you know, Wednesdays and Fridays, the best of best in topics of financial world. Today is no different. One of the good topics, one of the best topics, and one of the best speaker for these kind of topics. Today, we are live across EPS channels, YouTube, Facebook, Twitter, and LinkedIn. Thank you for participating in today's show. I'm KK, your host and moderator. Our topic for the next 1 hour is on banking in the next year, 2021. What's in store for us? To discuss the topic of banking in 2021, we have none other than Mr. R Gandhi. Mr. Gandhi is known out here. He has come on this show as guest speaker. Mr. R Gandhi needs no introduction. He has had a checkered career in the central bank of the country for many years to become the deputy governor of Reserve Bank of India. Right in front of you is a brief profile about Mr. Rama Gandhi. He has he's over 30 years of experience in the banking industry, and I think he's the right person to talk about the next year and what banking looks like in the next year, given that we have had this dismal year with the pandemic. So, ladies and gentlemen, despite the problems of pandemic, banks have risen to the challenge by and large, more or less. I think they have been there, for us. Customers were served, employees were reassured. Banks effectively deployed technology and demonstrated unprecedented agility and resilience to fight all the issues with pandemic. As we draw to an end this not so good year, we are all hopeful that the new year will bring us cheer. Mr. Gandhi, welcome to the show.
Thank you. Good evening, everybody.
Sir, good evening, sir. Sir, banks are figuring out how badly the pandemic has hit them in terms of losses. Back home in India, the NPA is expected to go up significantly with most of the banks. The bad news is that the end of pandemic is yet not there. It's not in sight. Okay, looks a long way for the banks, central bank, and the government. Sir, in your view, is there a light visible at the end of the tunnel as we draw to the end of the year?
Thank you, KK, for inviting me once again on this evening discussion. I'm very happy to be interacting with all of you.
My pleasure, sir.
Yeah, just to answer your question, we need to look into the way the economy has developed even during the pandemic period. Yes, the initial despondency which had been there all around in the first quarter of this fiscal, that quickly changed. The first on the ground, the people had not really noticed what is happening on the ground, and later official data and analysts have also noted the vigor with which the economy is bouncing back. So now there is no such despondency as we had in when the things started in the first quarter of this fiscal. Today, we are talking about the contraction in the current fiscal being at 7.5% only, or near about that. There's a general consensus, it will be anything between 7.5 or 8.5. That's what it is. But that's a consensus. But my own estimate, my own gut feeling is that we are going to do much better even in Q3 and Q4 of this year. Why I'm emphasizing is that the pandemic, it has kind of, at least from the economic perspective, if not from the health or social perspective, from the economic perspective, we can take that the pandemic has been taken in its stride. So people and business are back to business, back to their own economic activity. Yes, there is certain specific segments which are still languishing, but greater part of the economy is really bouncing back, has bounced back, and growing also much more strongly than even pre-COVID period times. So that is why we should look forward in the coming year to build on this kind of positive features that we have got in the economy. That is one. That is economy. On the banking also, you made a statement saying that NPA is likely to be significantly higher. That I don't agree with that at all. It is not going to be significantly different, because two simple facts or data points help me to arrive at that kind of an inference. One is, throughout this pandemic period, credit has not increased at all. Outstanding, I'm talking about the actual outstanding, not about the sanctioning. Actual drawal has come down. The credit outstanding has come down during this period. That means that people and businesses had resources to pay back. It is not that they were affected and there was no cash flow and their credit or debt is mounting. No, it is not. It has actually come down. That is something very strongly we should believe, that the things are getting normal. Number two, the actual deposit, the accretion, aggregate deposits in the banking system has grown phenomenally in this period. What used to be in a year collection has already been collected by the banks. That would mean that people and businesses have a surplus cash flow. That's why they're keeping it as deposits. So that is something, again, unless the economic activity has been robust, this kind of credit deposit generation will not be possible. So both on the deposit side and on the credit side, at least I believe that the economy is growing, and in the process, your estimate, or your not estimate exactly, your expectation that NPA is likely to be significantly higher, that is also unlikely. So that's what I would react immediately like this. Yes.
Okay, thank you, sir. My thought was only because because of deferment of the payments that are there. So so those kind of things, and there are things on interest and many other, and businesses are actually closed. So I thought this thing, but I go with your with your thoughts. It's good to hear then that if NPAs are not going to go up, that's good to hear. So when we enter anything new, we always look at the past. We are not yet there, but in a few days we'll be there. So what, according to you, are the developments in 2020 that you feel when we need to be remembered, and what needs to be forgotten?
Obviously, COVID is the one which has distinctly changed the whole atmosphere, not just the society or society alone, society and economy as well, politics and anything everywhere throughout the world, and including in India. So that is a clear distinguisher between 2020 and any years earlier. That's right.
Okay.
That's right. And when we come to banking specifically, the first major thing which we'll always remember is that, as you mentioned, en masse moratorium. To begin with, at least in the first 3 months to 5 months, there was a kind of en masse moratorium that has never happened in the history of Indian banking, that any and every credit outstanding will be automatically, by default, will be extended unless the borrower asks for not to be granted. So that is a very big experience, first time ever. So that is number one to be remembered as in the field of banking in 2020. And the second aspect of that is that even though initially such a vast accommodation was given by the banking system as moratorium to any and every borrower, actually, after 3 months or 4 months of that moratorium period is over, people have actually not availed. Many people have not availed compared to the initial expectation that large, near about 100% or 80% of the borrowers will be opting for moratorium. It has not happened. My bankers, CEOs, both in data and anecdotal evidences have confirmed that many are actually back to repaying their dues. So that way, that is also another aspect of I think that it is not that you believe that people are affected, but people may not necessarily be affected. That's number one. Second aspect, which we'll remember and forever, will be the capacity of the resilience that has been there in the whole world, including India. That is about work from home concept. This work from home, typically everyone easily understood that it is happening in the IT sector very easily. It is not possible in a service industry like bank, where banks and the customers will have direct touch with one another. That's a kind of assumptions which we had. All those assumptions have now been demolished. Yes, even in banking, work from home is possible. Not only possible, it is thrive. It can be thrived on even on a long-term basis. That is the second development which has happened. Third is digital offtake. That is the very big digital banking has increased because of e-commerce and other necessities of the day, but it has come to stay. So month after month, digital banking, various types of digital transactions have been growing robustly. So that is another thing which we'll ever remember about 2020.
Suppose. Okay. So if these are the three things that we remember about 2020 as good and bad. So in terms of 2021, how would the rules of game change in India in the ensuing year?
So they're looking forward. Obviously, we need to have a sort of guess of how it is going to be happening. So the first thing about banking will be the credit pickup. Credit has come to a standstill this year, whereby, as I mentioned, that actually it had come down all these months, except in the last 4 weeks or so. There's a slight pickup. So the total credit outstanding as of March has now been crossed now only. Otherwise, it was coming down. Anyway, so that going forward, we will expect the credit to be picking up. But there is a one caveat there also. It is not because of COVID the credit pickup had been languishing. It is not. Even the last fiscal also, that is 2018, 19, 1920 also, 18, 19. 1819 also, the credit pickup has been very, very slow. So the banking credit side at least had been languishing for the past 2 years. So hopefully in the new fiscal, we should expect that in 2021, we would expect the credit pickup to be happening. That's number one. Second, the bigger attention from the banking side in 2021 will be about the stressed sectors because of the COVID, where even now the restructuring discussions only are going on. Actual decisions relating to restructuring the those units which have got they have been affected very deeply, that has not yet happened. So I would expect in from 2021 onwards, from January itself, we should be expecting quite a bit of cases being restructuring announcement to be made. So that is the second one I should expect. And third, in terms of delinquencies, as you said, the NPA is likely to rise. No, that, as I said, I had kind of said that it will not happen. But one small problem area we're looking forward will be in the retail area. So the retail segment, because of the sudden spurt in retail credit, small value credit, very, very small value credit, thanks to fintech companies or others. So there is likely to be a problem. We should kind of expect that. In the last few days, I had seen some reports from Andhra, where the credit recovery had kind of been relapsed into the same trouble or the wrong methods which they adopted in circa 2007 when the MFI problem had happened. It looked like after 10, 13 years, it is rearing its ugly head again. So that needs to be watched. So that is certain excesses by the credit recovery teams of the lenders that if it is crossing limits and it is going to be widespread, then it is going to be a problem for us. So that we need to be looking for carefully about this development in 2021. So emergence of digital banking, that as I already mentioned, that is going to be certainly be strengthened in the coming years. The way people are targeting about open banking, neo banking kind of thing. So that is going to be another big development we should be expecting in 2021. One very clear expectation from me about 2021 will be there is going to be alternate use of information, not just for credit underwriting, which has already come to stay. We are going to have alternate credit information for credit monitoring purposes. So post-sanction credit and continuous credit monitoring is going to be done through en masse information that is going to be collected, not from normal credit channels, but beyond the credit channels. That is another development, interesting development we should be expecting.
Okay. So those are some of the important changes perhaps we can see in the next year. So ladies and gentlemen, this topic is something of interest to almost each one of us. And I would request you to, in case you have any queries, any questions to ask Mr. Gandhi, please mention the same in the Q&A box, and we will get it across to Mr. Gandhi. Should you wish to ask a question directly, this is the same. You have to, please raise your hand, and the digital team will help you to get it across the question. So, sir, I kind of have put a couple of the 2021, the couple of two or three things that are happening. Can you please enumerate? Could you throw light on that? For 1st of January 2021, the positive pay system reconfirmation above 50K. That's happening. What do you see that as a that's obviously to prevent frauds, right? Do you think that is a big step, is a very positive step?
Okay. As I mentioned already, the digital banking expansion is going to be happening continuously. So digital banking means that funds gets transferred in a jiffy, in a matter of few seconds, nanoseconds maybe in some cases. So in real time, it gets transferred. So along with that, the positive side of it is that the efficiency. Funds flow at the greatest possible speed. So that is a positive side of it. But the negative side of that will be in case there is some mistake somewhere, that deliberate.
Sorry, go ahead.
Whether it is a deliberate mistake or a mistake which has been done inadvertently, funds flow out of somebody's account, somebody's hands. And when this, it is not that, especially as the digital bank. So if in case thereby a transaction has gone into some trouble, we may say that we will be able to restore the funds back to you, provided you are not done the mistake. But that time period within which, by which time the funds will be restored, that may not be sufferable by a large majority of the population or the banking customers. So that is where upfront elimination of problems, elimination of failure of transactions, elimination of fraud. That is very, very critical and important. That's the reason we have developed developments like this, what you mentioned about the positive affirmation of the transfer that you make, that that kind of thing. Hereafter, we should be expecting more and more of such customer protection measures and ideas to come up and being implemented.
Okay. So that's a very positive step. It will not, according to you, right?
Yeah, it is definitely a positive step, and it is going to be, because it is in the interest of the customer protection.
Correct. Okay. Also, from January 1, the contactless card value moves from 2K to 5,000, 2,000 to 5,000. I think definitely that's in the COVID period, you really don't want to touch anything. So that facility is definitely, I think, a welcome sign. Don't you think so?
That's a compromise I think policy authorities have taken, because on the one side, as I said, in the just now I mentioned that policy is now getting oriented more and more of customer protection and avoidance of problems or fraud or failures of transaction. On the other hand, we also have to be clear and helping easy transferring of money, especially low value transaction. So that is where the second second factor authorization, which has come in the way of efficiency of transfer of payment in terms of speed and other conveniences. That is where the demand has been there. This 2,000 limits is very, very low. We need to be reconsidered, and now it has been decided to make it as up to 5,000 rupees. That would mean that if you really look at the average value of transactions of various types of payments that is happening in our country, the RTGS transaction per value average has always been in terms of near about 1 crore. 80 lakhs to 1 crore is an average transaction of RTGS transaction. And when it comes to NEFT, it is around 1 lakh rupees.
Yeah.
Okay? And next in the pecking order comes our check-based transaction. Per average check is also something in several thousand rupees. But the moment you come down the value chain in terms of the card-based transaction, the average transaction per card is something like 3,500 rupees. And when you go down further, whether it is IMPS or wallets and other thing, then and the UPI, the actual average value comes down to even 200 rupees, 250 rupees. So that would mean that majority of the transaction, because if you go by the volume of transaction, it is this low value transaction which predominate.
Okay.
So all these transactions hereafter will not need this second factor authorization kind.
Okay.
Up to 5,000 rupees, you can just like that tap it or swipe it or by input that is done. So that way it is encouraging to have greater shift towards digital transaction. It is a careful analysis about the risk involved, that it may not be accruing much. On that basis, this has been done. But as I said, that we hope that this kind of opening is not likely to create a problem for that very small person, not small value, small person. Small persons do not have the capacity to withstand cash out until it is restored. He doesn't have the time, that kind of resilience. So that's where we need to be watching. Even though we have enabled greater digital transactions, but we need to be keeping our fingers crossed that it doesn't create much of a problem for the very ordinary customers.
True. And the third one, the third change that we are going to see from January 1 is that the UPI is no more a freebie to be used by third parties. Amazon Pay, Google Pay, Phone Pay, Paytm, they all will have to pay for using. So, which is it's not going to be a free of cost. So, is that a good change? Because the digital numbers is what we want to increase, right?
Yes, there is, because of that, there will be a readjustment period during which we can expect a kind of hiatus on the growth of digital transaction because it is going to be costlier for the operators. So they have to, and if they have got revenue stream out of their into this digital banking, like monetizing the data or whatever, then it may not affect them to pay a little for the banks which offer them the services. So a kind of readjustment period we should be prepared for. That is that is natural. It is realistic to expect that. And after that initial hesitation, it will pick up again. But again, I need to be cautious in the sense that similar thing experience we had in the ATM industry, because once it was decided by policy that customer will not be paying anything much for the ATM transaction, whereas the cost will have to be shared by the other stakeholders in the value chain, from the issuing bank to acquiring bank, card agencies, and all other service providers in between. So they need to be finding their own business model to fund meet the cost of operations. Similar thing is going to happen in the case of the digital transactions also. So until that, and because of that, afterwards we found that ATM growth has been kind of stunted. It was not growing the way the policy relating to that customers to be paying for the ATM transaction. When that got changed, after that we found the ATM growth has been kind of muted. It is not. It was not at the same rate that we had earlier. Similar thing could happen in the digital transaction also. Let us see how it will pan out.
Yeah, I think it's a thing we have to keep watch. So, ladies and gentlemen, like I said, please send in your questions early. We are almost the halfway mark. So I'm sure you have a lot of questions to ask. So please do send your questions early. So, India has an unwieldy banking structure, which perhaps lacks agility, the speed to respond, to turn around. So what is the regulator's perspective to make the banking system adaptive to the changing landscape? We have never had such a incident where we really have to look at how to change, and that's what the pandemic has done. That your changes have to happen. You cannot be living like before. So what according to you are to be done?
See, first of all, banks are very big institutions. Yes. So naturally, their capability to be agile will be limited. It is not like a startup or a small institution or entity where you can dump whatever you are doing earlier and suddenly go over to completely new structure. So that kind of thing will not be possible in a bank, which is typically a very big institution. Not in terms of size alone, not because of they operate throughout the country, thousands of branches are there. That is one. But typically, the banks have offer variety of services, both on the asset side and liability side. It is not a single homogeneous product or anything. A variety of products and services the banks have. So that is why you may be very agile in a particular niche service, but the general services and other thing you may not be able to move that very fast. So that obviously that's a lack. I won't say lacuna. That's a inherent problem being a large institution. So that they have to live with that. So subject to that only, any kind of agility will be possible. Yes, COVID-related changes was forced on them. That time everybody has completely switched over to new method of doing, like work from home or whatever. That was because of the emergency. It is an emergency situation. That's why nothing else will work. So they have to adapt to the new situation. But in a normal time, I don't think that kind of pressure will be there on the bank to do serious change. It will be a measured change rather than just because a new technology or new idea is there, they simply move over to new being so very agile.
Okay. So actually, I have a question from Avinash from you. He's a YouTuber. He asks a question. on the same lines on work from home. He says, will work virtualization as adopted by tech companies will be adopted by banks, and will they benefit out of it?
Yeah, yes, work from home and virtualization based work will certainly be there. But again, banks will have to it will not be possible in every type of service that they are doing. For example, in the front end, it may not be possible. In the back end, it may be possible. And between various types of asset verticals, like the corporate banking or project financing, there it may not be possible. Whereas in mass banking, like the retail segment, where things can be structured more easily, where the virtualization-based offerings will be possible. So it will be in a very selective way. These new developments will be banks will be able to make good use of, not across the entire spectrum of its working.
Okay. Another question that has come is, he says, he's written to me. He says, KK, you have mentioned 3 changes coming. He says there's one more change coming from 1st of January. He says there's going to be a 30% cap limit for third-party payment apps. So you're aware of this?
Yes, that is about that UPI.
Okay, on UPI only.
Yeah, the maximum limit by one app. So to spread the risk across, otherwise 1 or 2 apps become the very dominant carriers of UPI transaction, then it can lead to systemic issues. That's why this kind of limit has been brought on to spread out, not to have all the eggs in one basket. So this is more risk avoidance or risk reduction measure. So this, as a system as a whole, we need to be living with this kind of restrictions. It is not a pure commercial oriented operation alone, because the entire system, the number of people that will be affected is, should something happen to this very dominant player, then it is going to be a problem. That is why, as a containment measure, systemic risk containment measure, this decision had been taken. That yes, that is going to be effective now.
Yeah, correct. So perhaps we may even see a little lesser number of digital transactions could happen, right?
Not I don't think a lesser number is going to take place, because we are talking about a continuous increase in the total pie.
Yes.
When the pie is increasing, the players can still have large number of transactions, including the biggest players. It is only the sharing or distributing the workload among very many players, rather than getting concentrated in 1 or 2 players.
Okay. All right. So looking at the technology changes that are coming up, and new things that have to be done, and innovations have to be done, what is your wish list to keep the public sector bank in the best of shape?
Public sector banks, the changes that we need to be bringing in, 3 important ideas I will present. One is, first, it has to be made as a board-run institution. That would mean that the Department of Financial Services, the government Ministry of Finance, should withdraw from active management of the day-to-day management of the public sector institution. So when it is made as a board-run institution, then the board of directors, they become responsible for strategizing and differentiating between one public sector bank and another public sector bank, and the accountability will also be very clear. So how to do it? That we first, the BBB, that the Bank Boards Bureau, will have to be empowered to appoint the part-time chairman and MDs by themselves, and the boards of the respective bank should be able to appoint independent directors like any other corporate entity. So remove the power of DFS to appoint board of directors effectively. That's what the first major change I would want it to happen in the public sector banks arena. The second will be relating to the compensation. Compensation of the public sector employees need to be freed and to be determined by individual banks themselves, and not by industry-wide settlement kind of thing. If at all, it can be acceptable only for the award staff, but not for the officers staff. There has to be differentiation. There has to be a proper payout for the efficiency that they bring in, and the differentiation between one particular bank which is growing very well vis-a-vis another who is languishing. There has to be a difference in terms of compensation. So that enablement will have to be there, and a variant of that will be the variable pay concept also. So that automatically that should be there, which will encourage proper efficiency. And when the efficiency is not, our performance not being up to the mark, there will be a kind of corrections. So that's a combination of stick and carrot and stick type of compensation that should be possible to be done. So that will be the second change I would want in public sector banks, so that they get into a better shape. And third will be the public sector banks will not only percent. They said this comment will can apply to even other banks as well. That except the very big public sector banks, the top 5 or 6, which can be enabled to be in the business of corporate banking, project financing, etc. Rest of them will all be concentrating on the retail segment. The moment they will concentrate on the retail segment and MSME funding, agricultural, rural, etc., in that case, the board and even the top management can be freed of credit decisions, because the size of each individual credit is going to be smaller. It can be done by line management, and the board and the top management can concentrate entirely their time on strategizing, monitoring, and control. So they need not be weighed down by the individual credit decisions, and in that process they commit either they go to the extreme of being very, very risk prone, or on the other side completely risk avoiding. So that kind of extremes we can completely avoid, and the boards and the top management will be able to guide the line management properly. So these are the 3 changes I would want to happen in public sector banks.
Well, these are like big changes that you're asking for, but yeah, it is good so that they are in line with the other corporates and other businesses that are running. So they will be no different. So in the first one, you said that basically you're saying the government should not be looking after day-to-day operations, and the board should run it and not get involved in the board decisions and all. Is that yeah? That's a big change, right, sir?
Yeah.
Okay.
That will need quite a bit of possibly even some legislative changes also, but some matters relating to BBB can be done administratively. That they won't need the law to be amended, National Act to be amended or anything, because these have that is doable. And compensation also can be completely an administrative decision. It doesn't require any policy by legal change. That can be a pure decision within the ministry. And the banks to the boards and the top management not to have any credit decision responsibility. That can be very easily be done by the banks themselves. Even they need not even look up to DFS or anybody to decide that.
Well, I think what you are suggesting is excellent 3 steps. by which we can expect the public sector bank to really gear up and be in the best of shape. But I think it requires big thinking, bold, bold the policy making at the top has to come through. And I think I hope people who are listening to that will look at least a couple of them, so that public sector banks can are able to move. So will loan restructuring help banks clean their books, or will it make them more cautious while lending?
See, compared to the restructuring effort which we did before until COVID and during COVID, there's a distinction. Because pre-COVID time, when an account has gone bad and because of that it needs to be restructuring, etc., those efforts were guided by several factors. Because accounts went bad either because inherently the business was bad, or the promoters did some malpractices, or the entire economic environment has changed, international factors. So there were any number of extraneous factors, including management's own commissions and omissions, which led to the accounts getting into bad status. But during COVID, it is a single reason why the accounts have gone bad, because of the COVID, there has been the economic activity has been stunted, and because of that, the cash flows of the respective units have been completely negated, and there is no immediate prospects of quick revival in this specific type of industries. So that is a commonality of the problems of the units which are now candidates for restructuring under the COVID period. So that's a distinction. So because of this, here all the bankers, including the public sector bankers, everybody clearly understands that here the contribution is entirely beyond the control of anybody. Anybody, whether it's a promoter or the various other stakeholders, or even the debt creditors. So it is providence. That is much by nature. It has been that has been the initiator of the problem. So that is why I don't think, because of this kind of restructuring, there will be hesitation on the part of the bankers to slow down or to be more cautious in the coming period. Not because of this COVID-related experience. Their hesitancy, their cautious nature will be guided by the pre-COVID related experience. Yes. And whatever they had met with because of vigilance or CBI and all those things, that may inform the hesitancy, not because the COVID-related problems.
Okay. So one of the things, a question that I've got out here is that he says that it is now abundantly clear that COVID-19 has acted as a catalyst for digitization. Should banks in India embrace technology completely and take it to the next level?
There are limitations on technology, yes, in terms of improving efficiency and customer experience. Technology has a lot of capacity to offer. That should be definitely be that banks should take a good advantage of that capability. That is granted, certainly acceptable. But will it lead to completely digital-based banking, digital-only banking? Yes, there are some, quite a few handful of institutions may go for that kind of strategies. That is possible. En masse, all the banks to go? Absolutely, it is not possible. Because banking, there is any number of banking services where personal contact, personal discussion, bespoke solutions, and continuous iteration of the issues. So those things will definitely need personal interaction between the bankers and the borrowers or other customers, other type of customers. And certain documentation will also will have to be certainly there. So those kind of thing may not be amenable, or it will be possible to do those things completely through digital means. Yes, digital impact, digital footprint will be continuously be increasing in other areas where it is possible to do. And because of that, some bank like DBS Bank, for example, had declared itself to be 100% digital banking. That is before LVB merger. Now that after LVB merger, they have got so much of footprint, then the digital banking will remain by them as a strategic offering rather than 100% digital banking that way. So that way, in specific cases, it will be successful also if they 100% they convert themselves into digital banking or the neo banking. We hear about some applications are being made. They not yet approached the Reserve Bank, but at least through the press we come to know that is some ideas are there in some people's mind that they will promote a bank which will be a neo bank, in the sense that 100% all operations, all their service offerings will be only through digital means. Yes, that will be possible. For example, today's our payment banks, like Paytm Payment Bank, for example, it has only one branch or two branches.
Yeah.
But it is offering by any number of, it is catering to a very large customer base. How? Entirely through digital banking means. So the other payment banks also are in if not in that type of is one or two branch, like Fino Bank has several branches, but it is also doing quite a lot on digital banking. So also the Airtel Bank are like that. So that way, a digital only bank can also be there along with other banks, but 100% of the banking to go into only digital mode, certainly that is not going to be there.
Okay. So do you foresee any like core banking was a mandate from the central bank, right? Every bank should get into core banking. Any such mandates you are expecting?
See, I think the central bank mandated way of functioning has been slowly changing. We are in a period of development when the banking was getting developed, and that is where during this period the central bank had the responsibility, and it did discharge also to guide the banks what all the common minimum things everyone should have. So that's a kind of programming. That was the period at that time. Now the banks have all matured. There are any number of banks who can think about making improvements by themselves. Certain standards to be brought on. Earlier, as I said, that it was supposed to have been brought by the central bank diktat. Now the market is able to build on its own the standards.
Yeah.
When it is able to bring its own standard, why the central bank will intervene? They'll only be blessed. Yes, please go ahead. Because a voluntary effort by the market participant will be a much preferred option rather than a central bank imposed or the regulatory imposed options. So only when the market is not wanting to do certain things, that is a time perhaps the central bank will step in and say that all banks will have to conform to certain regulations. Now, today, NPCI is determining certain standards. In those days, those standards might have been issued by the Reserve Bank. Now it is not required. The NPCI is able to do. So same way, I understand that the Sahamati, the new thing which is coming up, this account aggregation related sphere. Sahamati is evolving the standards for the all the players. So the central bank need not prescribe it. So that's why when today the market has evolved, market participants have matured, it should be possible for them themselves to bring in standards and adopt it. It need not necessarily be dictated by the central bank.
Yes, but you are saying this based on also looking in view that we have a number of small banks, and they are like, you would also look at that.
Yes, obviously, regulator will be looking at the whole scenario. If if it sees that certain type of entities are lagging behind in adopting certain standards, certain common minimum that is required, and at that time certainly they will come forward. to prescribe that. The distinction is that even now, central bank will look at only not by default. Earlier, by default, it was determining the standards or the minimum required things. Now it will look at only the gaps. If the market is unable to fill the gap, then it may fail.
Okay, sure. Okay. Mr. Gandhi, we have typed also questions coming. Some people may want to ask a question. So we have Mr. Tripathi, who is a very regular out here. He would like to ask a question directly to you. Mr. Tripathi, can you unmute and ask the question directly to Mr. Gandhi?
Good noon, sir. Sir, first thing I wanted to ask you that there are reports that 2/3 of the banking sector is on ventilator due to COVID, and budget is round the corner. So, what is your budget wish list, and can you elaborate on this point, sir?
I don't think 2/3 that kind of numbers. I don't have data points to support that. Actually, I'm eagerly waiting for the bank's FSR, which should come in the next few days. That will throw out the clear numbers. What is the kind of problem the COVID has created? In terms of because the if you go by the borrowers' hesitancy in availing moratorium, even though banks, as I said, that under the direction from the Reserve Bank and the Supreme Court orders, etc., have been for any and everybody, moratorium was automatically offered by default, but many have not taken because they did not want moratorium. They had actually paid back. And paying back, not paid back, they are paying back. That would mean that the widespread expectation, or rather NPAs should be very large. That is unlikely. That is unlikely in terms of retail segment. Yes, in the affected segments, where still restructuring is being talked about or being discussed. So those segments of the economy, there we should be expecting because the timeline given by the Reserve Bank is going to end now in the next few days. So by the time all the banks or their respective lenders will have to come to the conclusion whether they will approve a restructuring and take it to revival, or they will take it to liquidation or whatever the other process they take. So that is specific to certain segments of the economy, not across the board.
Sir, second, today itself, Reserve Bank cautioned against lending by unauthorized apps. Sir, could you please elaborate on this thing? What kind of safety measures people should take? If I am not wrong, even Opera browser, it offers you some kind of lending in India. Today itself, RBI cautioned against this kind of lending to small players by unauthorized players and apps.
Yeah. That during the one of the questions which KK asked, I did answer that. Yes, that is a disturbing. I don't want to call it as a trend. Here and there, we have got a news item that is some apps or the app providers, they have gone much beyond the prescribed way of recovery. So they have gone into gray area or actually violating certain basic principles in dealing with the customer's dignity and how to recover in a proper way. They are not following. So because of that, certain developments which have taken place that is definitely not good. So I only hope that it is only by a small number of entities rather than it is widely adopted by all. So that's why the caution by the Reserve Bank should be in the right spirit. The app providers should be hearing and adopting so properly. We hope that we don't want the repetition of what happened in Andhra MFI in 2007, that issue, that type of problem to happen with reference to this app-based lending.
Thank you, sir.
Sir, you went out for about a minute. You were talking about some reputation, and then you freezed.
Oh, sorry. Which point? The point that I was making is that
Yes.
don't want whether it is app-based providers
Yes.
of credit or others, nobody should be violating the standard principles relating to recovery of their dues from the customers. They have to respect the dignity of the customer, the borrowers, and their measures means adopted by them will have to be humane. If they cross lines here, it can recreate the problem which had happened by 10 years before in Andhra with reference to microfinance. And because of that, there was a big negative impact on the microfinance sector. A similar thing should not happen with reference to the app-based lending, because in app-based lending also, the typical size of such loans is very, very small. It is very, very easy, and it is liberally available when it is needed by the borrower. At the right moment, it is available, but that does not mean that they can take them for granted for any kind of treatment. So we need to, the app-based lenders will have to be revisiting their methods that they have adopted for loan recovery.
Okay, sir. So I have another question which says that with COVID, the digitization has come big time. Work from home has also started. So does it, and the public sector banks, who have the largest number of branches, have been consolidating. Bank that have been merged into various bigger banks. So are we seeing an end of new branches in India?
Yeah, branch as a concept has completely changed. So the branch expansion, which we used to follow it as a matter of policy, both by the government and the Reserve Bank, that completely undergone a change. It is a well accepted position today that to offer a banking service or to avail a banking service, one need to have a branch. That is not there. So today, any number of alternate methods, channels are available. Digital banking and other type of channels are there. So that is why now the Reserve Bank has changed its approach from the branch concept to touch points, where
Yes.
the customers will be able to get their requirements fulfilled, service requirements fulfilled. So it can be a branch, it can be a BC point, it can be any other type of identity. So that's why the concept of a branch has undergone a change. The emphasis on branch expansion has completely gone a change. So we were going forward, we can expect whether the branch concept will die. No, it is not, because there are certain elements of banking requires the presence of existence of a branch. So to that extent, branches we will continue, but the greater delivery will be through alternate channels and digital means. So that's why I gave the example of the payment banks with just 1 or 2 branches. They are offering their services throughout the country. So that is definitely when we are targeting more and more of hitherto financially excluded people. For them, these kind of services, digital services, makes much more sense from their side also, and from the offering side, from the bank side, it is cost effective as well, and it has made it commercially viable for them to go below the normal line where they stopped offering services. Now they're able to go much beyond that estate.
Okay. So there is this, you said that 100% digitization is not possible. So Shah says that, millennials form the next set of customers for banks. And additionally, even today, millennials are the most significant percentage of mobile banking users. So when all these millennials come forward, including Generation X that comes forward, he feels that banks have to change 100% to digital banking.
That I already granted. That is certain elements of banking or certain special type of banking services can be 100% digital.
Yes.
That and some banks or some entities who will offer only that is also possible. But 100% of the banks, 100% of the services by bank to be digital, that is not possible. Because I gave some examples like bespoke solutions, the corporate lending, project lending, high net worth individuals related services. So there will be my personal interactions will definitely be needed, required, and some type of offerings will quite a bit of documentation, physical documentation may also be needed. So that's why I don't say that 100% of all banking activities by all banks will become digital. That is not possible. But yes, specific institutions can be certainly be 100% digital.
Yes, absolutely. So my final question to you is again on 2021. That's just a few days left. What would be the 3 key dominant themes according to you in 2021? We have covered a couple of them already, but if you could just reiterate for our audience.
Discuss that what is going to be the dominant in the banking sector because of recovering from the COVID. Obviously, that will be one of the dominant development, that restructuring of the specific segments, and that after effects of or follow-on actions relating to COVID will certainly be the dominant theme. The second dominant theme will be how to kind of imbibe the work from home culture on a long-term basis. Whatever has happened was during this COVID period as a stopgap and immediate temporary measure. Now everyone will plan out that in a permanent way, how they will make good use of that work from home type of action, and what kind of enablement or precautions or continuous safety measures will be needed. That will be the second dominant theme to in 2021. I will expect that to happen. And third, in 2021, the credit pickup, because I am a little bit worried about the credit not being in the forefront of banking activity, so to say. Because everybody is gung-ho about digital banking. They are all talking about transfers and payments and at the low end, small credit that is there, but beyond that it is not happening in a big way. Credit offtake is not there. That is number one. Number two, another development which is compelling in my own analysis is that India is becoming more and more of service economy. When it is a service economy, like a large credit demand will not be there, because services can be rendered with very little capital. Many type of services do not require capital expenditure, large factories to be built up kind of thing. It is not there. So that's why that actual demand for credit is not going to be much. That is a second reason why the credit growth has not been phenomenal, or private credit formation is not happening. So that is a second one. Third, relating to credit not being, domestic credit is not picking up, is because foreign capital is flowing. Throughout this COVID period, we have seen we have a very, very large foreign capital flow. Where you look at the forex accretion to the forex reserves, it is more than $100 billion in a year. It has never happened. That kind of plus funds we have been continuously receiving. I was looking at the data relating to the fund flow for capital, private non-financial sector. That data as of now is available up to March 20. There itself, last year, there is a very big distinction that foreign resources are meeting 40% of the requirement. That is equivalent to banks. Banks were 41 and foreign were 39. So almost equivalent to that. And the rest was by NBFC sector and other thing. So that is a previous fiscal. This fiscal, as I said, that already banks credit flow is absolutely zero as of now. We can take it as incremental credit has not been happening at all. In the remaining 3 months, also it may be a little more, but definitely it is going to be very, very limited. And the way foreign credit flow, foreign fund flow has been happening to the economy, that means that our credit needs or our funds needs are now increasingly from abroad rather than from the domestic requirements. So domestic savings are all going towards the government funding to meet the government fiscal deficit. That's what has happened this year. So hopefully in the next year we should see corrections thereof.
Yes, thank you very much, sir. So, ladies and gentlemen, I hope you have enjoyed hearing Mr. Gandhi and his predictions for 2021, or the themes for 2021, which he feels will are likely to come in the banking side. So, on this point, I would like to end the show. We passed the 5 o'clock mark, and please join me in wishing Mr. Gandhi Merry Christmas and Happy New Year. And
thank you for every listeners and everybody also within the EPSL and KK, me and everybody. And my best wishes for a very happy Christmas and a Happy New Year.
Thank you, sir. Thank you very much. Good evening and bye-bye, sir.